Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome. You're with us on Bazaar Morning Call. As always, we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Surbhi Upadhyay with me, Nigel D'Souza and Rima Tendulkar. And guys, now it's like a literal countdown on, right? 4 plus 2, maybe 7 odd trading sessions left, or maybe 8 trading sessions left before this year winds down. It's been a challenging one, but the bulls will hope that now in these last 7 to 8 trading sessions, they can get some cheer.
Well, that's right. And, on Friday, it was a pretty good trading session. The bulls will be hoping towards the end of this year, hopefully, you see a bigger performance coming in from the broader markets as well, which will be heartening to see.
Guys, finally, the Christmas week is here, and next week will be the New Year's week. So last few days, and let's get the show started.
Absolutely.
Absolutely. Santa cheer. Well, there's not been too much of that on the screen. But we had a little bit of a glimpse of it on Friday, and the bulls will hope that that continues. So let's see what the global setup is like. It's actually not too bad because we've had a positive close on Friday on Wall Street. Most indices were up. The great AI trade seems to be back. Actually, a couple of these AI-related stocks did very, very well, starting with the Oracle. Oracle is the one that pulled things down last week. But, on Friday, it was up 6-7%. It was reacting to the TikTok deal. Oracle is now one of the owners of the US entity that owns TikTok, along with the Silver Lake and the Abu Dhabi fund. So that really caught a lot of attention. There was buying on NVIDIA, 4%, different reports indicating that perhaps the US government could offer NVIDIA some respite, could allow it to start selling some of its chips in China with restrictions, not the entire bouquet, but at least some products could be opened up for Chinese sales. So that got, again, the market excited. And Micron continued its winning ways. Micron was up 10% when the numbers came out last week. It was up another 6-7% on Friday. So really the AI trade pulled things higher, and the Nasdaq was the best performer on Friday. Not too much movement in terms of the dollar or the yields. The data point that was out was the University of Michigan Consumer Sentiment Index. And that was a little softer than expectations. On the back of that, the 10-year yield moved up a couple of notches. 4.15 is where we left things on Friday. By the way, speaking of yields, the Japanese bond yield, 10-year yield, did close above the 2% handle. So that's something that we're going to watch out for as well. Speaking of Asia, not just Japan, obviously we need to watch for China because there's news coming out of there. Interest rates left unchanged for 7 months in a row, despite the weakness that we've seen in Chinese retail sales and Chinese industrial output, but no change in the 1-year or the 5-year loan prime rate. So no fresh cuts announced over there. Now, the little bit of a Santa cheer that's coming in is coming in the form of this cash market buying. And on Friday, we had a little bit of that as well, about 1,800 crores. But by the way, for December as a month, we're still net negative on FPI numbers by almost 14,500 crores. So December has not been a great month in terms of FPI. So the last couple of sessions, things have looked a little better. Now, the rupee is something we need to keep an eye out on. You remember as we were closing trade on Friday, that absolutely massive sharp surge that came in. I mean, the currency moved by a whole rupee. That's the kind of, improvement that we were speaking of. We don't have any more specifics on the trade deal. I mean, that's the big negative over the weekend. We don't have any clear comments. Jameson Greer did make a remark to Bloomberg and said that negotiations are still ongoing with India. He was speaking with the reporter both on EU and India, which have been slightly stickier trading deals to negotiate. And that's all we know, but no further clues in terms of progress on the India-US trade deal. So that's a bit of a dampener. Now, for us, the Nifty is once again coming to the top end of the trading range, which is anyway a very narrow trading range. 25,700 on the way down, 26,100 on the way up. And now we're again approaching the 26,000 handle, which is where things kind of get stalled. But watch for financials because, and we'll talk about this as we go over, there are lots and lots of positive brokerage upgrades, commentary coming in on Shriram Finance. The street has taken it rather well. There's $4 billion stake purchase that they've got. So that's something we'll watch out for. So financials continue to be in focus. But otherwise, Nigel, hoping for more of that positivity.
Well, that's right, Surbhi. In fact, in Friday's trading session, it was a good one for the Nifty as well. We broke the 4-session losing streak. You made a higher high and a higher low, and we ended around the 20 DMA. But the bigger positive was what happened in the broader markets. And the market breadth, in fact, it turned positive. After 3 days of weakness, if you look at the BSE advanced decline ratio, that was at around 1.91, which is the highest we saw since November 26. So the broader market outperformance was heartening to see in Friday's trading session. As you said, institutions were buyers in cash, and clearly there were signs of short covering in the index future space itself. The Nifty open interest was down, the Nifty Bank open interest as well was down. And that perfectly ties in with what we saw from the FIs. So first signs of shorts getting covered out, 5,900 contracts that get covered out. Though you need to keep in mind, the FIs, well, they continue to remain net short at around 91%. So in index futures, stock futures, you had covering that was seen from the FIs. And we were mentioning this last week, that it was getting a little bit excessive. The FI net short positions were holding at around the 92% odd. They're still holding at around 91%. But there was a first glimpse of short covering that we saw. What about the Nifty PCR? Well, that had come down to around that 0.9 odd. That's moved back up to around 1.13. Why did that happen? Because the put writers came back into play. And the call writers, after the kind of velocity we saw on the upside, some of those call writers were packing out. So the 25,900 put, 25,800 put, both of them were fairly active in Friday's trading session. What are the levels to track? Well, the recent low, that's 11th of December low, at around the 25,700, that becomes the important support zone that you're looking at. Just in the near term, that's a reference point you have on the downside. But on the upside, going by the options data, going by the kind of levels we've seen in the past from where the Nifty's done a bit of a U-turn, this 26,150 to around 26,200, that appears to be a bit of a congestion zone. And the bulls will actually want to go ahead and conquer this mark. And for that to happen, you'll require support coming in from the Nifty Bank because that's in that range, 20 as well as 50 DMA. On the downside, this 50 DMA becomes important. It should not be breaching that mark. Ballpark around 58,500. That's where you have the 50 DMA. But on the upside, this 59,270 is the important mark on the upside. So we'll keep an eye out on that one. Stocks that I'm looking at, I think the stock of the day could be GE Vernova TNT because they've gone ahead and they've won, an order coming in from an Adani Group subsidiary, and it's an HVDC project. Nuvama, they put out a note. They see there's an upside risk to their earnings, to their target price as well. And their current order book is around 13,000 crores. This order itself could be in the vicinity of around 8,000 crores or thereabouts. So that's the kind of magnitude in terms of the order. This probably will be the stock of the day. GE Vernova TNT stock to watch for today.
Thank you very much for that. A quick check on Asia. Japanese markets are soaring. It's a 2% rally. This is after Bank of Japan, remember, raised the interest rates to a 3-decade high. So Japan and Kospi both up 2%. Taiwanese markets also soaring, 1.5% up on that. Hang Seng is a bit subdued. SGX Nifty should come up for you on your screen. Ed Yardeni, president at Yardeni Research, is now joining in. Ed, just going by the US price market action, what's kind of clear is that the AI trade is not over. At the beginning of last week, we saw a lot of rotation out of the AI-related stocks, but they came back. And look at Micron. I was just seeing Micron's up 200% year to date, and the valuations are still 7-8 times forward multiple, FY27, going by BofA's estimates. That's incredibly cheap, right? 7-8 times forward multiple. So what's your thought going into 2026? What should we expect top down?
Well, I think the AI trade is going to be more volatile in 2026. I think what investors have come to realize over the past several weeks is that the AI stocks used to be fairly independent, especially the Magnificent Seven, kind of like a Game of Thrones. They each had their own kingdoms and surrounded by big moats, and they didn't really invade each other. They had their own unique businesses. But what AI has done is really forced the Magnificent Seven to compete with one another. But they're all going to be spending more money, and a lot of that's going to benefit stocks in technology that are not classified as the Magnificent Seven.
Hi, Mr. Yardeni. Good to have you on the show today. Hope you're all set for the holidays and the festive season.
Absolutely.
Wonderful. So thank you for taking out the time for today. India's really had a bit of a rough patch. Market's done okay. Market's not like it's not collapsed, but it's been disappointing, the lack of this trade deal. And we had a comment from Jameson Greer. Didn't say anything much. He just said that, we're still talking and negotiations aren't over yet. What's the sense? And on Friday, by the way, we had a massive move in the Indian currency. every now and then there's some rumor in the market and you think the deal's happening, and I think that's what makes currencies and stocks move here. But what's your sense? Do you see any common ground come January?
Well, I think 2025 was a year of consolidation for the Indian stock market after having been one of the great outperforming markets for a few years. And I think 2026 could be a better year. It could be a year where the market moves to new highs. Clearly, we're going to have some resolution of the trade discussions between India and the United States. And I think that'll happen. Meanwhile, in January, the Supreme Court may rule that these tariffs are not even constitutional, which could create some uncertainty about what the U.S. is doing with tariffs. But I think the other issue is that China's stock market has been doing very well, and I think a lot of global investors kind of view them as alternatives. But I don't. I think there's opportunities to invest in both China and India, though my preference is to invest in India simply because I like the legal and corporate system better than what I see in China.
All right. Hi, Ed. Good morning and good to see you, Ben. Wanted your view on two asset classes. One is the S&P 500. All through this year, you sounded very optimistic at the start of this year.
Yeah.
But the way things panned out, well, you were bang on. The S&P 500, has kept scaling higher highs. So for 2026, what kind of levels are you working with on the S&P 500? And I wanted your take on gold as well. All that glitters, yes,
sure,
it is gold. So where's that one headed?
Well, the S&P 500 is basically at 7,000. We're maybe a percentage point away or 2 percentage points away from 7,000. So I think we're basically there. That's been my call that we would get there. I have to admit, though, this year, I usually don't change my forecast that much, but this year I got a little bit on a roller coaster ride with the president's views on tariffs. But all in all, it's worked out well. And this would be the third year in a row of double-digit gains for the S&P 500. And I think next year we could have a fourth year of double-digit gains, something more like 10%. This year may come in around 16%. Previous 2 years were around 20% plus or minus. This year ahead, I think we could get to 7,700 on the S&P 500. Now, looking at the S&P 500 and gold together, what I've found, if you put the two on the exact same chart with the same scale, what you see is that gold and the S&P 500 tend to be inversely related on a short-term basis, which makes gold a good way to diversify a U.S. stock portfolio of the S&P 500. The trend, however, is almost identical, and so I've got the S&P 500 getting to 10,000 by the end of the decade, by the end of 2029. And I think gold could get there as well.
So 7,700 by the end of 2026. So that is a little more than a 10% upside.
7,700 by the end of 2026 for the S&P 500. 10,000 for the S&P and for the price of gold by the end of 2029.
Wow. But gold is up 5,000. It's going to double.
Yes, I think it could do that. I mean, in the past, when we've had gold rallies, they go much further than people anticipate.
All right. Wow. That's something we'll remember for sure, Mr. Yardeni. And what's your time frame? When are you expecting gold to hit those kind of levels?
Well, again, I've been talking about the roaring 2020s, and that scenario's worked out pretty well. So I would say by the end of the decade, by the end of 2029, we should see gold at 10,000 and the S&P at 10,000.
Wow. End of 29, gold at 10,000. We'll remember that one for sure.
Just the CAGR return on gold is going to be astounding from here on if you've got to hit those kind of returns. Ed, just a word quickly on Bank of Japan. There was a lot of concern with the 25 basis points rate hike. Will it lead to unwinding? What has transpired and now what is the view? Is that too much of a concern, this hike?
Well, it seems as though the issues in Japan aren't really spilling over into the global economy or the global financial markets. Japan's got a very contradictory fiscal and monetary policy. On the monetary policy, the central bank's concerned about inflation, so it's kind of stepping, or it's basically stepping on the brakes. Meanwhile, the new government is coming in on the fiscal policy side, stepping on the accelerator. It's not a good way to drive a car to have one foot on the brake and another foot on the accelerator.
Okay, all right, Ed, we'll leave it on that note. Thank you very much. Interesting conversation as always, and wish you a fabulous, fabulous end to the year. Merry Christmas, and wish you a very happy 26th.
Same to you, folks. Thank you very much.
Thank you. Well, with that, let's quickly move on and talk about a lot of the stocks that are going to be in focus, because there's actually been plenty of news flow and action, some acquisitions and, some business updates. So here's a list of the top 10 stocks. We are going to be, okay, before we talk about the top 10 stocks, let's talk about all the guests that we've lined up for you on the show today. And Amnish Agarwal of PL Capital is going to be joining in at around 8:30. We'll discuss a couple of fundamental stock ideas with him. We'll have the management of Saregama to talk about synergies from their Bhansali Productions stake acquisition and what lies ahead for the business. At 9:20, Neeraj Seth of 3R Investment Management is joining in. He's our market master of the day. At 9:30, we speak with the management of Nalco, talk about the global demand-supply scenario and the progress on the company's expansion plans. After that, we'll be chatting with Dipali Goenka of Wellspun Living, get an outlook on the new calendar year with her. Towards the end of the show, we will bring you a special GST discussion with Prateek Jain of Pricewater and MS Money of Deloitte. Stay tuned for that.
Time to slip into a short break. We've got a lot of stock-specific action to track for you in a special top 10 segment. I'm giving you a sneak peek. Fortis, Kim's, MCX, Varun Beverages, GE Vernova T&D, Indian Hotels, Tata Chemicals, as well as KC International. They'll be reacting to positive news flow. On the flip side, Kajaira Ceramics, Granules India will be reacting to negative news flow. Take that break, come back. We'll get into further detail on all of these names.
Welcome back. On Friday, we had a bit of a Friday rebound, recovering all of the earlier volatility and losses. The Nifty closed at 25,966, a gain of 150 points. And this morning, the SGX Nifty is suggesting another strong start. What about stocks? Our entire research team is standing by with CNBC-TV18's list of top stocks for the day. And first up, let's go across to Ekta on Fortis Healthcare, the acquisition they've done, and Kim's. Good morning.
Morning. Well, yes, hospitals are in focus this morning. Fortis has made an acquisition to expand the Bangalore market. They've acquired a 125-bedded People Tree Hospital for 430 crores in the area. The current hospital revenue is around 75 crores as of FY25. Company says there is potential to expand the bed capacity to 300 plus beds and to scale up the infra with further investment of 410 crores over the next 3 years. Company already has a presence in Bangalore with 7 facilities and the potential to scale up to 1,500 plus beds from the 900 currently. Krishna Institute of Medical Sciences, or KIMS, has entered into a leave and licensing agreement for around 1.16 acres in Chennai to set up a super speciality hospital of 300 beds, investment 300 crores. They've increased their equity stake by 6.94% for 148 crores in Sunshine Hospital separately.
Okay, all right, Ekta, thanks a lot for that. Well, Sudarshan's come back after a brief leave, but I believe he is joining in from Delhi. Hey, Sud, morning, welcome back. Tell us, what are you tracking today?
Good morning, Nigel, and thank you. And today I'm tracking MCX. You have seen that gold is at record high, silver is at record high, and also this stock has been seeing an increase in the volume over the last few months. And now over the weekend, there's a comment coming in from SEBI chairman, and he's saying that he's looking for increased participation of banks and insurance companies in the commodity derivatives, and for the same, he's in talks with both RBI and IRDAI, that is the insurance regulator, for the participation of banks and insurance companies in commodity derivatives. And also, he has set up the expert working groups to deepen agriculture and commodity derivatives. And also, he's working on engaging with the concerned officials to resolve the GST issues in commodity trading. And he believes that GST hurdles impact delivery and settlement on exchange platforms, and if these issues are resolved, that will boost agri and non-agri commodities, including gold. So on the back of that, and also because of the increased volumes that MCX has been seeing over the last few months, I'm going with green for MCX for today also.
Okay, all right, got that. So we'll keep MCX on the radar. So thanks very much for that. We've got Vinny joining in. She's watching out for a bunch of names as well. Morning, Vinny.
Hi, good morning. So first I'll start with Varun Beverages. Now the board has approved a 1,118 crore acquisition of the South African company called Twiza. Now this company is engaged in manufacturing as well as distribution of its own brand, which is a non-alcoholic beverage. Now what analysts say that this is very positive for Varun Beverages, given valuations are almost in line with what Varun Beverages has been doing with its previous acquisitions. Other than that, they expect Varun Beverages' market share and volumes to start seeing an improvement and increase to 20% around in the South African region. So that is why a positive there, and we could see green here for Varun Beverages. Now GE Vernova T&D, that's where we are expecting a sharp up move today as well. The company has gotten an order from AESL, that is Adani Energy Solutions Private Limited. This is a project for designing establishment of around 2,500 megawatt of high voltage direct current, that is HVDC segment of the company. And do not forget, this is a very big order win. Analysts are expecting this project cost to be around 16,000 to 18,000 crores. And also just an FYI alert that Hitachi Energy was expecting to get this order. Now obviously it's coming from GE Vernova. So we will see GE Vernova in a positive up move today. But other than that, we'll see Hitachi Energy maybe could see a negative sign there. HCL, that's the next one we're keeping an eye on, as the company has entered into an bidding agreement to sell the entire 25.5% stake that they have in Taj GVK. This is in line with what they've planned for their 5-year roadmap to become that capital light strategy as well, Accelerate 2030, which is their strategy. And that is why maybe HCL also will see a bit of a positive move there.
Thank you. And for more stocks in the news, let's go across to Ria.
First, let's start off with Tata Chemicals. They are going to acquire a sodium bicarbonate maker Nova Bay in Singapore to strengthen their value-added portfolio. Now, this will be done for an enterprise value of 25 million euros. And Nova Bay serves the pharma, food and personal care industries in markets like Europe, America, Asia, as well as the Middle East. The turnover in 2024 for the company was roughly 30 million Singapore dollars, and this acquisition is to be completed by March of 2026. Moving on, though, to KEC International, this one will also be in focus since the Delhi High Court has stayed the order from Power Grid Corporation from back in November 2025, excluding the company from participating in tenders of Power Grid for a period of 9 months. And further, the High Court has also allowed the company to continue to participate in the ongoing bids of Power Grid. So both of these stocks expected to open in the green on the back of positive news flow. Moving on, though, to two stocks that will be in focus on the back of negative news flow. Kajaria Ceramics is the first one. Now, the CFO of the company, the CFO of Kajaria Bathware, in fact, Dilip Kumar Maliwal, has been found to have committed a fraud over a period of the last 2 years by way of embezzlement and siphoning of funds of a company called Kerovit Global, which is a wholly owned subsidiary of Kajaria Bathware. Now, the estimated amount of funds embezzled is rupees 20 crores, and a complaint has been filed with the Delhi police on the 18th of December, and investigations are currently underway. And Dilip Maliwal has also been terminated from his position in the company. And further, the company is also holding an investor call at 11 a.m. today. So that will be key to watch out for some more clarity to emerge on the matter. The last stock that we're keeping an eye out on is Granules. The US FDA has completed an inspection at the arm of the company Granules Life Sciences at their facility in Hyderabad with 5 observations.
Okay. All right. Thank you, Ria, very much for that. Let's quickly recap our list of stocks to watch. The ones that have positive news flow around them would be Fortis Healthcare, KIMS, MCX, Varun Beverages, GE Vernova T&D, Indian Hotels, Tata Chemicals and KEC International. Stocks with negative news flow would be Kajaria Ceramics and Granules India. All right, so that's our stock list for the morning. Let's figure out what's happening in the world of commodities. We have Manisha joining in with a roundup of all the action. Manisha, holiday spirit setting in or not?
Not yet, because when you look at the markets right now, we are making newer highs for many of these commodities. So silver is trading at an all-time highs right now at around $68.50 an ounce. the ongoing debasement trade, strong underlying fundamentals where we're dealing with scarcity and deficits as well for a sixth straight year expected for 2026. All of that is very, very supportive. But it's not just silver. Gold seems to have come back in favor as well. And we're looking at gold making an all-time highs above $43.80 an ounce. Well, falling interest rates, broader economic uncertainty seems to be supporting here as well. And really, a lot of funds before they're closing their books for 2025, the allocation seems to be coming in for precious metals. So not just gold and silver again, you have platinum prices trading at around nearly 12-year highs. Palladium seems to have surged nearly 4% in the previous week itself. And we also are looking at the crude oil prices trading in the positive. What with the renewed hostilities between Iran and Israel and the brewing US-Venezuela conflict seems to be supporting crude as well. And the kind of jump that you have seen in all of these commodities seems to be making a spillover effect for base metal prices, which also are trading in the positive. So it's very difficult to find a commodity which is trading in the negative in the Asian markets right now. Strong gains continuing here.
Manisha, thank you very much for that. Guys, we forgot to speak about Infosys. What
was that ADR issue and then they issued some clarification? What happened?
So basically, on Friday, the ADR shot up 40-50%. Then there were multiple trading halts, and finally the ADR settled at about 4-5%. Now, over the weekend, the company clarified that there is no material development, there is no deal win, any fundamental catalyst to explain that. So what analysts are surmising what exactly happened? Because this is an extraordinary price action that we've seen, right? 40-50% kind of a jump. One could be possible short squeeze. Anyway, ADR volumes are thin, and they particularly thin out towards the end of the year. And secondly, there was also an article which spoke about mislabeling. Maybe in some algorithms, the Infosys ticker, the name got exchanged with some other name, and that led to buying, and therefore then a short squeeze, etc. So these are the two possible explanations.
Some
maybe
algo error.
some algo issue where there was mislabeling. That is the word that they use, right? So Infosys got replaced with another name, and that led to buying, etc.
No fat finger. No one's saying fat finger.
No fat finger.
Okay.
I was at my son's annual day, and then suddenly it spiked up, and I was looking forward to a great weekend. It looks like a trade deal is coming, and Nigel's going to be in office. So when you all clarified on the group that actually it's not that, and I was just breathing a sigh of relief. I just continued enjoying the show, because otherwise I was like, oh no, this is not going down too well. Want a trade deal, but I didn't want it last weekend.
Yeah, but during the weekdays, preferably, if we have our way. All right, let's take a quick break on that note. We'll come back on the other side. Amnish Agrawal of PL Capital will join in with some fundamental ideas.
Welcome back. Hope you're having a good morning. Well, as promised, we have Amnish Agrawal, Director Institutional Research at PL Capital, who joins us on the show. Hi, Amnish. Thanks a lot for joining in. Well, I think the stock of the day could probably be GE T&D Vernova. They've gone ahead. They've won a large HVDC order. I think your analyst tracks Siemens, Hitachi, as well as GE T&D, if I'm not mistaken. Your view on the stock, and what could it mean for some of these stocks like Hitachi, which has done very, very well? They have won a last couple of HVDC orders, but suddenly, you have GE T&D who's coming in.
Yeah. There are only a handful of players. For example, 3 players are there. Am I audible?
Not really. I'll tell you what, we'll just get that fixed, Abneesh. And then, in fact, we'll come back to you with regard to that. But that's going to be practically one of the stocks of the day, GET&D. Let me just check whether we have... Let's see what the stock actually has done in the last 14 days or so. In fact, it's up 6.5%. There was a bit of a sniff that they could possibly be in the racing to get this particular order. And that's precisely the way it's played out. And Nuvama says that on a base of around 13,000 crores, they are going to be potentially adding close to 8 to 10,000 crores. They're waiting for official confirmation on that front. So that's the kind of magnitude of the order.
And the EPS growth, Nuvama estimates is 41% over FY25
with this order or without?
I think with the... Actually, I'm not sure.
I think it's they're waiting to revise their estimates is what I read last. But let's get Amnish back on the show. Amnish, GE Vernova T&D, that could possibly be the stock of the day. I think you all track even the others, Hitachi as well as Siemens. So what does it mean for the company and what does it mean for some of its peers?
Hi, Nigel. So on the HVDC space, there are very handful of players. So you have got your GE Vernova is there, Hitachi is there, Siemens Energy is there, and maybe possibly BHEL is also operating in this area. Now, if you look at this order win by GE Vernova, I think this is very significant for the company. And this is definitely a positive. It might be executed over the next 2 to 3 years. So the top line and bottom line push will definitely come. But having said that, if you look at the estimates of the analysts, I think a lot of these orders, they are already built in. So in terms of estimate change, yes, there might be some bit of an estimate change. But having said that, if you look at all these companies, they are trading anyway, even on FY28, closer to maybe 60 times. So the incremental increase in the stock prices just because of getting these orders, I think a lot of it is already built in. However, the visibility for the next 2 to 3 years for many of these names, particularly GE Vernova as well as Hitachi, it remains pretty strong.
Got that. So the stock perhaps is already re-rated, trading at 60 times forward multiple, but incrementally it's doing well because of the kind of order wins that we're seeing. Amnish, thoughts on Varun Beverages? They made a small acquisition which further increases their presence in South Africa. And I was just going through it. Now, while the company doesn't break up the domestic versus international exposure, I think rough analyst estimates are 80-20. 80% comes from India, balance 20% from the international markets. And Indian market volume growth this year at least, and Varun Beverages follows a calendar year, has been on the flatter side due to erratic weather movement, while international volume growth has been strong. So the company is making another step to increase its, diversify and increase its international exposure. Your thoughts on Varun Beverages and the acquisition?
You see, as far as your acquisition is concerned, I think they are gradually building up and expanding their base in Africa, which is positive for them. That is one. Now, on the other side, if you look at the domestic business, as you said, is around 80%. But last year, it has not been very good because they have a December year end. So my sense is that if you take a longer-term viewpoint, the kind of growth they have seen in the past few years, that is unlikely to be repeated. That is one. While on the other hand, the stock has corrected significantly from the 650 levels to the current level, the risk reward for them remains relatively on the favorable side. Now, if the current upcoming summer season pans out well, because for them actually 1Q and 2Q are really big quarters. If the summer pans out well in the coming year, which is your CY26, the stock has the potential to give reasonably good returns from the current levels.
Okay, all right, Amnish, stay on. We want to talk to you about financials and in particular Shriram Finance as well. But let's first bring in Gaurav just to jog our memory again on what has been the biggest deal that we've seen in the Indian financial landscape in probably all time and what brokers are making of it. Gaurav, morning. I mean, cursory glance told me that a lot of brokerages are actually positive on the deal. What did you pick up?
Well, yes. First it was MUFG and now it is brokerages who are being positive on Shriram Finance is what we can say, because we have got a bunch of brokers who have actually upgraded the target price. So first let's talk about CLSA. They have increased the target price to 1030. What they're saying is that there will be some strengthening in balance sheet and at the same time cost of fund will reduce significantly. They're expecting improved profitability and company will also enter into low risk segment, and as a result if you look at ROE we may see some dilution, but even after that they're expecting mid-teens ROE to be maintained by the company. Apart from that, when it comes to IIFL Finance, they have also given a target price of 1200 rupees. They say that it is going to be a significant benefit for their cost of fund. In fact, in terms of numbers, they're expecting 70 to 80 basis point of increase in the spreads. Apart from that, they're also expecting ROAs to reach around 4.5% by FY28. When it comes to Nomura, they have given a target price of 1140. They're actually lifting FY28 AUM growth target almost to 20%. And Jefferies, they say that with this capital, the tier 1 ratio will reach 30%, but this will be beneficial for the company because there will be some rating upgrades to AAA for Shriram Finance, and that is something which will be beneficial. And at the same time, if you look at valuation, 1.9 times price to book at FY27 is a very cheap and very attractive valuation, is what they say. DAM Capital, they have actually increased their growth target almost to 18% for the next 2 years, and at the same time, they believe that ROEs they may fall to 12%, but there will be some trajectory which will bring back ROEs to 14% level. And lastly, Kotak Equities, they have given a target price to 990 rupees. What they say is that large capital infusion can actually poses a challenge because of the leverage issue, but there will be some improvement in the debt market, and that can actually benefit the company in terms of cost of funds. So all in all brokerages are positive about the deal. They have also increased the target price. We have already seen stock reacting almost more than 4% on the day of decision itself. So let's see if there is any other move left in the stock, but definitely bullish brokerages on Shriram Finance for the day.
Yeah, absolutely. Okay, got that. That's quite helpful. Gaurav, thank you for all the views. Amnish, what's your sense? Shriram Finance, more to go on the upside?
In the near term, slightly difficult to say because the stock has already seen an uptick in the recent past in the anticipation of this deal happening. However, with the capital adequacy moving up, with the MUFG now coming on table, I think the rating upgrade will happen and the cost of funds for the company is likely to come down. Now, in that context, I think the valuations relative to some of the other NBFCs, they are still not still that expensive. So I believe from the current 1.9 over a period of time, we will see re-rating happening for this stock. Maybe even if you presume 2.4, 2.5 over a period of time, then the stock will lead to reasonably good returns. So difficult to say what happens in the next 15 days or a month, but if you take, say, a couple of years viewpoint, I think the stock looks good from the current level and one should accumulate on any decline.
I request you to stay on. We need to slip into a very short break. On the other side, we'll come back and address market technical. Sudarshan Sukhani, Mitesh Thakkar will join in to tell us that after we see a gap up, what is the approach to trade? Welcome back. Let's go across now to Hormus, who will focus on the shareholder lock-ins, which come to an end this week. Hormus?
It's a big week for the shareholder lock-ins, maybe a truncated one, but we have 16 companies whose lock-ins end this week, value at almost 12,000 crore rupees. And the interesting bit is that the 10 out of those 16 companies, which is more than 60%, are trading below their issue price. Now, today itself, we'll have 4 lock-ins end today. The primary one being International Gemological Institute, or IGI, shares of over 7,500 crore rupees that will free up for trade today. That stock itself is down almost 25% from its IPO price, and barring BLS E-Services, the other 3 are trading below their issue price with losses anywhere between 10% to as high as 50% for stocks like VMS, TMT. Now, in tomorrow's trading session, we'll have 2 companies, recent listings, Satvik Green and GK Green. They'll also see their lock-ins over 100 crore and 70 crores end. Now, Satvik Green is down 15% from its issue price. GK Energy is trading exactly where its IPO price was, at 153 rupees. Now, on Wednesday, we'll have 3 lock-ins end: Ganesh Consumer, DEE Development and Atlanta Electricals. And barring Ganesh Consumers, which is down 30% from its issue price, the other 2 have done fairly okay. DEE Developments is trading around 6% above its IPO price. Atlanta is trading 30% above its issue price of 754. And on Friday, we'll have the majority, 7 of them, where their lock-ins end. It's most of those companies that came out with IPOs in the month of September, when we had this rush of IPOs coming out. And Shesasai Technologies, Jaro Institute, Concord Enviro, ARS Infra Solutions, and all of these stocks down anywhere between 25 to 45% from their issue price. They will have their lock-ins end this Friday. And Anand Rathi shares, the only outlier of sorts among this list. The stock is still well over 42% above its issue price, despite cooling off from its post-listing high. So it promises to be an important week for the lock-ins ending.
Lovely. Thanks a lot, Hormus, for joining in and giving us that. But Hormus, can't let you go at that. You normally tell us about all the big movers, some of them that saw very good delivery as well. Tell us more.
Indeed, and Shriram Finance was, of course, the talking point yesterday, remains the talking point today as well. The stock ended at a record high on Friday. It's seen some strong volumes and 2.5 times compared to that of Thursday. The volumes also the highest since March of last year as well. Now, over 3.5 crore shares were traded on Friday, the 20-day average of just over 70 lakh shares, so 5x on compared to the 20-day average, and even 1.5 crore shares were marked for delivery compared to a 20-day average of just over 42 lakh shares. The stock still up 55% this year, turning out to be the best calendar year since 2017 and at record highs. Now, new listings were the ones in focus on Friday. ICICI Pru AMC, of course, that listed on Friday. Look at 20% up move. Lenskart and Grow, after their initiations that came in respectively from Jefferies and Macquarie, also saw double-digit gains yesterday. Look at the volumes as well. ICICI Pru AMC had shares worth over 8,000 crore rupees traded on Friday. Lenskart had close to 1,000 crore, and even Grow had shares worth over 3,000 crore rupees trade during Friday's trading session. And lastly, Rain Industries was another upmover on the broader markets on Friday. The biggest single-day gain since January of 21. Friday's moves were the highest in 4 months in terms of the volumes, with 2.5 crore shares traded, 20-day average of just around 18 lakh shares, and or close to 40 lakh shares were marked for delivery compared to a 20-day average of around 9 lakh shares. But the stock has been a bit of an underperformer. Third year of negative returns in the last 4, and is also down well over 30% from its 52-week highs.
Thank you very much for that. What you should also watch today will be the sensex changes which come into effect. So Interglobe Aviation is going to be a part of the sensex effective today, and it will be replacing Tata Motors passenger vehicles. And plus, there will be 32 other changes which will be effective in BSE 500. At 11 o'clock is Kajaria Ceramics conference call on that fraud, 20 crore being siphoned off by the CFO. And then at 12 o'clock will be the Shriram Finance MUFG deal press conference. So that's what's on the tap today. Amish Agarwal of PL Capital is also with us on the show. So Amish, you give us 1-2 big ideas for 2026.
As far as the major ideas are concerned, I think one stock where we have been consistently positive on the past few quarters is Britannia Industries, where I think the momentum is on their side. They will benefit from GST. The raw material and all the pricing pressures are also over, and I will see this company giving you 15 to 18% kind of a PAT CAGR over the next couple of years. So the stock is not at the bottom, but I think it still has got a lot of momentum, and there is a scope to make, say, around 15% over from the current levels over the next 12 to 15 years. So this is I would say clearly one stock. And then you should look at, say, some of the defense names, whether these are the likes of Hindustan Aeronautics or BEL, because they have seen some correction from the recent highs. And some of these defense names, they have got strong order books. The new contracts that continue to flow in. Yes, can they grow very fast? Maybe not, but again, a very, very, I think, steady set of stocks. And I believe these stocks will also give you compounding returns even from the current levels.
Okay, those were some trading ideas. I mean, some investing ideas for 2026 that Amnish likes. Amnish, a quick word on Kajaria Ceramics. We will get greater clarity at 11 o'clock when they hold the press conference. But the fraud risk, the fraud case is clearly a headline risk today. So, so how would you approach it in terms of the internal controls, the impact on the financials? What is your initial verdict?
Incidents that happened earlier in the ceramics and tiles industry. This is not the first time. And even in some of the industries, we have seen such kind of risks which have been there in the past. But a lot depends upon how the company handles it. That is one. And secondly, what sort of systems and processes changes which happen otherwise. Now, if the risk is not that much, if the fallout can be good, I think this is only passing phase. Because I think going by the size of the company, it is not much which is going to happen. It's where balance sheet company. For a period of time, I think it also requires that the system and processes in the company they need to be improved. So some kind of, you can say, the initial impact, then that could be there. But I think over a period of time, if it is managed, then it will be just an event to pass.
Okay. All right. Hamnish, thanks very much for being with us today and giving us those stock ideas. We'll take a break on that note. Come back on the other side. We'll have the pre-opening rates, and also the management of Saregama will be joining in to talk about synergies from their Bhansali Productions stake acquisition. Welcome back. There you see it. It's around 8:52 right now, so we have some time till the pre-open rates kick in. Let's bring in our technical experts, figure out how we should navigate trade today. Sudarshan Sukhani and Mitesh Thakkar with us as always. Gentlemen, good morning and happy Monday to both of you. So market gave a little bit of a festive fever or fervor on Friday, right? The way we saw the Nifty try and claw back from the lower level of the trading range. So Mitesh, what's the call going to be? Because we're still not at the topmost part of the range yet. So is there still a long trade on the index?
Good morning, Sumi. I think, the index very clearly, we've maintained that it's a range of 26,300 to broadly 25,800, 750. And we still don't have a signal of a breakout as yet. But, maybe after today's price movement, in case the ending is stronger than where we start the day at, then I think we might be looking at an early signal for breakout. But for that, we'll have to wait till I think noon time, or maybe around the closing time, we'll be able to figure that out. But for the time, let's assume that the index remains in a range, and therefore today's gap up opening may not immediately invite long trades, because again, you will not be sure of a breakout, and you'll be towards the upper end of the range. So I think on the index, I'd still avoid it and be more stock specific.
Okay, be stock specific. Staying out of the index. Sudarshan, what about you?
Yeah, good morning. See, the Nifty has bounced back from its strong support levels of 25,700, 25,800. So I had explained that we need an affirmation of strength, a message that says, okay, I'm prepared to hold on to support and go higher. That message we received on Friday. Now, today's gap up, unfortunately, creates a situation where we cannot go and buy the market at the morning itself. So we have to be patient. Let the gap up be filled in. If the Nifty falls 100 points from its highs for the day, that's a buying opportunity, because that would represent a dip. Now, there is no way to say if we are going to break 26,300 or not. This is an opportunity to be there if the breakout happens. So buy the Nifty on a dip, keep 100-point stop loss from our entry levels, and then wait for the fun.
Okay, wait for the fun. Well, let's see. Should get some of it, because Asian markets have such a deep shade of green, and that's what the pre-open is indicating. I mean, the implied open is indicating that we'll start with that large gap. Okay, what about individual stocks? Sudarshan, what's on your list today?
Well, IRCTC is a buy with a stop under 660. Fintech is a buying opportunity with a stop under 1,055, and it's an all-buy list. Motherson is a buy with a stop under 120, and M&M Finance is a buy with a stop under 365. Since we are talking about the Nifty anyway, for stocks, it's better to focus on mid caps, which is what I have done.
Got it. All right. And Mitesh said he doesn't want to do too much on the index, but he would like to look at stocks. So Mitesh, what are the stocks?
Yeah. Morning, Nigel. I have all buy calls today. Given the fact that the index will open gap up, we'll have to slightly adjust these calls tactically. But what looks good to me is Britannia, buy with a stop at 60.60 for targets of 6,200. APL Apollo made a fresh swing high, so buy here with a stop below 1,800 for targets of 1,865. Buy on Manappuram with a stop at 287.5. Look for targets in the range of about 304, 305. And Tata Elxsi had a very strong price and volume action on Friday. So that's a buy with a stop below 53.48 for targets of around 55.50.
Okay. Got that. Thank you, gentlemen, for your stock list. Very quickly, I want to bounce off Shriram Finance to both of you. On the fundamental side, the brokerage calls are very, very optimistic. On the fundamentals, people are giving targets of 1,100, 1,150, some even 1,200. But technicals, does it make sense to buy afresh? Sudarshan?
Well, it does make a lot of sense to buy and hold as an investment idea. I have to also disclose that one of my algo strategies has a lot of Shriram Finance.
Okay. And Mitesh, what do you say?
See, I like the stock. In fact, it's shown a very good, steady up move. Slightly run off a bit if you look at the up move. It started from 620 or levels. So in that sense, slightly overbought and may not give a good entry point right now. But any pullback to 20-day average, I think I'll be very comfortable exploring a long one.
Okay, all right, Mitesh, one more. Reliance Industries. That big boy has actually been in top form. That was one of those big constituents that conquered the 20-day MA and holding strong as well. What's your view?
For Reliance, again, after, it's rallied to about levels of 1550, 1580, it's been kind of steady. Now, if you look at the historical chart, we got the highest weekly closing on the in July 24 at about 1586. So that 1586, 1600 is the mild supply pivot. But in case once that level is crossed, then I think Reliance could be the first indication that the Nifty will get into new highs and start a fresh trend. So beyond 1580, 1600, I think the stock could even test 1750, 1800 zones.
Okay, all right. Got that, gentlemen. Well, we've got about a minute and a half left before, the pre-open rates come in. As promised, let's get to Saregama. Now, why are we talking about Saregama? The company is in focus. It is acquired. Sanjay Leela Bhansali promoted Bhansali Productions for 325 crore rupees. It's a big deal in terms of numbers, in terms of the monetary value, and obviously in terms of just the creative value of this as well. This deal aims to strengthen Saregama's market positioning in the video segment, as well as music licensing. So it's pretty significant. It's a name that all us moviegoers are very, very familiar with. We have Avarna Jain, Vice Chairperson at Saregama, joining in to take a couple of questions. Avarna, thanks very much for being with us. Can you first explain the structure of the deal? What is the rationale behind it, behind going through the CCPS route? Because it doesn't seem to be an outright equity investment.
So essentially, the reason we've gone with a CCPS is basically it'll convert into equity in October 28. And the advantage this gives us is that there's a pre-agreed formula which is based on the financial performance of the parameters of Bhansali Productions over the next 3 years, which will determine if we'll get 28% or our stake could go up to anything up to 49.9%. And the predominant reason for us going ahead with something like this is that, we'll make the initial payment of 325 now, but as we go along, I think by 2030, we also have the right to increase our stake to 51. And while we entirely fund this investment through internal accruals, with this fund infusion, Bhansali Productions will be able to sort of not be dependent on advances from theatrical distributors, digital platforms, and hence they can negotiate better deals. And this will yield much better returns for us.
All right. Hi, Avarna. Good to have you on the show, and congratulations, first of all. Well, give us a few more details. What was the rationale for the investment? And beyond music rights, what kind of value unlocking potential do you see with this particular acquisition?
So when you look at this investment that we made into Bhansali Productions, as I mentioned before, I think we have decided to partner with the sharpest mind and the most creative mind in the industry. The main aim was to have a continuous pipeline of music at an acquisition cost that has been controlled. So what this means is that all the music that Bhansali Productions produces in its films going forward will automatically come to Saregama based on a pre-agreed formula. This structure will guarantee Saregama's steady pipeline of premium marquee film music, and it eliminates competitive bidding. And this secures sort of a long-term market share for us in new music. I think we anticipate about 30% of our new Hindi film music content to come through Bhansali Productions. And this basically will help us reach our goal of, we want to become the #1 music content IP company. And this is, one of the major steps we've taken in that direction.
Okay. All right. Avarna, how much of a benefit does that give you in relation to the bidding process?
So it's hard to quantify, but what happens is today when a film production house comes to you and, sort of you plan to purchase their music, what happens is that if I offer X amount, my competitor might offer X plus something amount. So that bidding process then is not relevant for us, especially where Bansali Music is concerned. And given his track record of the kind of music he creates, I mean, it's a wonderful place to be for us.
Oh, I'm sure, yes. Just to dive a little deeper, Avarna, so how will the music rights deal affect your revenue stream? Will the focus be video or music? And, really, what are the revenue implications for you?
So see, the huge focus is the music rights part, right? It gives a steady stream. I mean, 30% of new music that we would acquire would come through Bansali Productions. That's a large chunk. It gives us a very steady stream. It also gives us, not only does, apart from giving us a steady stream of new content IP, it also gives us a fixed price at which you will acquire the content. So there is no question of acquiring content at a very high price and then it not giving you a good payback. That is all pre-established. So there is it's a certain percentage of, things like production costs and other costs that come into account when you're doing that. So it makes it very, very simple for us. What it also does is that it allows us to gradually exit our own film production business. So once the projects that are in the pipeline are completed, it frees up working capital, it frees up, management bandwidth, and we leave people who are best at this, Bansali, to do what they are best at.
Avarna, how is your own video production business going to be phased out?
No, so we basically, the plan is to sort of, all the ongoing projects will gradually be completed as and when their completion date arrives. And then henceforth, we'll route all video production through Bansali Productions.
Okay. Got that. Avarna, final question. You've also just acquired Finet Media. I think it was just last month. So, what is the overall plan like? Will you keep having more acquisitions in the near term, or will you wait for at least these two to stabilize?
Hear them as they happen.
Okay, all right. I guess we'll have a longer conversation on this a little later. Right now, just running into market opening. But thank you. This gave us some context, at least, on the business. So appreciate you joining in, and good luck with the acquisition that you've done. So Bansali Productions. Now, a large chunk of their equity is going to be with Saregama, and the music rights it seems to be the real icing on the cake. Okay, with that, let's get back to Sud. He's watching out for a couple of interesting brokerage calls. So Darshan, morning. So which one's caught your eye?
Good morning, Surabhi. So I have a long list of brokerages today. First one, I'll start with Morgan Stanley has downgraded T-Tiger Wagons to unequal weight from overweight, and target has been cut to 771 from 1017 per share. It says freight segment should continue to be one of the largest contributors to the company over the next few years, but it has not seen any major orders in the last few months, and also backlog visibility is limited, and these are some of the reasons why MS has downgraded the stock. Next one is, again, it has written on Dixon Technology. It has an underweight call, and target here is 11,563. It says IT hardware import norms have been extended, and that might lead to growth uncertainty as far as Dixon is concerned, and it might be challenging for company to meet the guidance that it has given for the IT hardware revenue. It believes that IT hardware revenue may contribute almost 7% to its total revenue by FY30, but there is a downside risks to that estimate if the other companies start importing on the back of the favorable import norms. Next one is Nomura has written Ashok Leyland. It has a positive note. It maintains the buy call, and target has been increased to 196 from 174 per share. It says it has a better visibility on a stronger up cycle that commercial vehicle segment has been seeing over the last few months. If you remember, we had mentioned a few months ago that now there is another positive cycle, up cycle has started for commercial vehicle, and there was a commentary from M&M also regarding this. So it believes that growth will improve to double digits in H2 FY26 and FY27. Even valuation is attractive given 18% EPS CAGR over FY 26-28. Nuvama has initiated coverage on Westmont Corp, and it has initiated with buy call, and target here is 1,028 per share. It says company has established a strong presence in the metal pipe sector, and it aims to expand from metal pipes into building material products, and expects core to benefit from its 5,500 crore capex program that it has through FY 27. Revenue and EBITDA expected to compound at 21% and 22% respectively over FY 25-28. Last one is Avendus has initiated coverage in IKS Healthcare with a buy call, and target here is 2,020 per share. It believes that pricing on outcome and output models to drive client relationships and economic benefits. There is a strong headroom for growth for IKS Healthcare, and it expects 16% dollar revenue CAGR over next 3 years, and EBITDA margin may rise to almost 33.6% by FY 28.
Sudarshan, thank you very much for that. You've given us lots of stock and ideas to think about. On Titagarh Wagons, Morgan Stanley has done multiple downgrades from the start of the year. In February, while maintaining an overweight rating, they slashed the target price from 1,300 to 1,090. In August, they further cut the target price to 1,017, which has further come down to 771. And the stock also hasn't done too much. The key reasons being continued delay in Vande Bharat coach deliveries and limited new orders. So keep your eye on Titagarh. But let's get back to Sudarshan and Mitesh for 9-10 calls. Sudarshan?
Well, it's M&M Finance. Buy M&M Finance with a stop under 365.
And Mitesh?
I'll go with the buy on Tata Elxsi for targets of 55.50.
Okay, M&M Financial and Tata Elxsi, 9-10 calls.
Okay, all right, gentlemen, got that. Thank you very much. By the way, before we move on, like I've been saying, we'll keep an eye out on the currency because while the rupee appreciated in a significant manner, in a very sharp manner on Friday, later in the Wall Street action, we had the dollar actually rally quite nicely. The dollar index is slightly higher. That's the dollar rupee, as things stand right now. Pull up the dollar index as well, because from lows of about 98.20 thereabouts, it's again rallied closer to the 98, now 98.64 mark. This is in the Friday action. Well, we discussed the rupee, the macros, and a lot more with Chetan Iyer of Morgan Stanley. He remains a big bull on India and expects nominal GDP growth in the country to bounce back to double digits next year. Take a look.
Private capex is going to be coming in with a lag. You should see this turnaround in consumption and exports, improving top line for the corporate sector for 9-12 months. And then we will see a follow-up in private capex. But these two factors of consumption growth and exports turnaround, we think will bring better nominal revenue growth for the corporate sector as well as nominal GDP growth. So for nominal GDP growth, we're expecting it to accelerate back to close to 10.5% by December 2026 quarter.
Okay, all right. The stock of the day really on Friday's trading session was Shriram Finance. A lot of brokerages have gone ahead and they have written their notes post-market hours. Gaurav joins in to tell us what are they making of it. Gaurav, it was a long-awaited deal. Normally you see sell-on news. This time you saw buy-on news. And the brokerages are still upbeat. Tell us more.
Well, yes, if you look at Shriram Finance, the euphoria which is seen in the market is specifically because of the price of the deal at which the deal happened at 841 rupees a piece. If you look at the current market price when the deal was announced, it was at 860. So it was a little discount to the market price, and given that it is 20% stake that they are looking for, it is actually the India's largest FDI, and that is the reason why market gave some cheer to the stock as well. And now brokerages, they are also turning bullish on the stock. In fact, if you look at CLSA, they have increased the target price to 1,030 rupees. What they're saying is that this will actually strengthen the balance sheet and at the same time lower the funding cost. We've already seen Shriram Finance as one of the players where funding cost is higher than peers. Apart from that, they believe that there will be improved profitability and company will also enter into a lower risk segments like MSME and retail. So that is something where we may see some shift in strategy as well. They are actually expecting ROEs to come down because of the leverage which will go down, but at the same time ROEs will remain in mid-teens as per CLSA. If you look at IIFL, they have given a target price of 1,200 rupees. They say that this is going to be very positive for the cost of fund. In fact, for FY28, they're expecting 4.5% ROE for the company. If you look at the numbers, they're expecting cost of fund and overall impact to actually improve spreads almost by 70 to 80 basis points for the company going ahead. Nomura gave a target price of 1,140 rupees. They have actually lived the AUM growth target target from 17 odd percent to 20% for FY28. If you look at Jefferies, they have also increased the target price. They say that the tier 1 capital now will be at around 30%. Now, this is actually beneficial when it comes to the credit rating. They are expecting credit rating to go up almost to AAA. And at the same time, if you look at valuation as well, there also they are finding some comfort at 1.9 times price to book. They actually see valuation at a very comfortable level. DAM Capital also increased the target price. They believe that ROEs will fall around 13%, but at the same time, it will move up towards 14% level by FY28. And lastly, Kotak Institutional Equities. They have increased the target price to 990 rupees. What they're saying is that it is actually a large capital infusion. If you look at the number, it is almost 66% of the current equity that they have that will be infused in the company. But at the same time, they believe that the improvement in debt market comfort will actually help the company grow further in terms of cost of funds. And at the same time, considering all these factors, they have also increased their target price for the company. So all in all, brokerages are turning bullish. We have already seen MUFG have announced that deal. So they are also bullish on Shriram Finance. At 12 o'clock, we have a press conference from Shriram Finance. So we will also see how the management is going to address this deal and how they see growth going ahead. But all in all, a good deal for Shriram Finance. We have already seen the stock is up almost 2% in the pre-open. So let's see if it sustains the move for the day for Shriram Finance.
Okay. All right, Gaurav, thank you very much for that. Indeed, is building on those gains. And what a stock it's been, right? Shriram Finance, one of the best performing now with these moves. It is probably the best performing stock on the Nifty. Yep, 60% gain in the last 1 year. Phenomenal ride with the brokers calling for higher levels going forward. Okay, let's do a quick check on some of the stocks that have been in the news and how they're faring. Should watch out for Kajaria Ceramics. Kajaria is down about 2% in pre-open because of this alleged fraud that happened with one of the company executives. It's a very small amount, but it just rattles investing sentiment. So 2% lower over there. There's granules on your screen as well. Stocks that are reacting more positively would be a KEC International. The Delhi High Court has given the company some relief with respect to, whether they can or cannot bid for Power Grid's orders. There's a stay on the previous order, and now it seems that they can go ahead bidding for Power Grid work. So 3% up on KEC. Tata Chemicals also in focus, 1% higher. Varun Beverages has done a small acquisition, so we'll just get that up for you on the screen, 2% higher. Wellspun Corp, on which there's a positive brokerage commentary, what Sud was just telling us, that's reacting well, almost 3% higher there as well. Everything else is more or less flat. Fortis is expanding. They've acquired a hospital, just about 1% there. Krishna Medical, 1% up. So this is the way it's playing out. By the way, on Titagarh Rail, on which Morgan Stanley is quite negative, stocks down 0.25%. But then Titagarh has already fallen, a fair bit, 30% down already this year. So maybe some of the concerns about lack of, orders, maybe that's already in the price. So not seeing too much of a reaction, at least for the time being. We've got 20 seconds to go. We'll thank our technical experts on that note. Mitesh and Sudarshan, thanks very much for all the trading ideas for today. Let's see what's happening on the Nifty. On the Nifty, it's actually the IT sector seems to be carrying on the baton from Wall Street and NASDAQ because that's where the buzz came back in terms of US market action. And a lot of IT stocks, Infosys included, look like they'll start off on the positive side. So it's really IT all the way. And a couple of financials, banks and non-banks, looking good at the start. So here the bell goes, and what we've got is a 90-point lift-off. 26,000 is here on the screen. In fact, it's 26,050. So we are once again getting at the top end of the recent trading range. Shriram Finance is flying 2.3% up as we see it right now. Beyond Shriram, it's all about IT, like I said. Infosys 3%, Wipro 1%, TCS about 0.25%. Tech Mahindra is also putting on about 0.75%. So IT is looking strong. Let's see what else is working. Reliance, 0.5% up on that stock. So it's giving plenty of ammunition to the bulls. L&T is very supportive. Bharti Airtel is supportive. So is ITC. So a lot of the big batsmen, they've started off quite nicely this morning. But Infosys is really something, 3% up. It's actually head and shoulders above the rest of the IT pack as well. All the other IT stocks are positive, but Infosys 3.2, 3.3. Very, very interesting start for this one. On the flip side, there's Interglobe Aviation and nothing else really. I mean, there are no other Nifty stocks which are down in a big way. Interglobe is the only one that's down about 0.5%. Rest are not even down that much, so not worth counting. Flying start for the bulls, 120. So, guys, it seems some Christmas cheer showing up.
Well, that's right. Good start is what we are seeing. The market's holding in the green. What's doing well, actually, from the broader markets? A few stocks should come up for you on the screen. GE Vernova TND. That's the one that we pointed out earlier. It could practically be the stock of the day. That's what it is. Stock is up close to around 10% because of that big HVDC order win. So that one's flying away in trade today. What else is doing well? Grow, that's up close to around 5%. And there's a massive volume actually on Grow. Just take a look at that stock. Up and about in today's trading session. Grow, spiking up as we speak. Jupiter Wagons, that's another stock that's moving well, 6.5% higher. And, what else? You have Swan, that's up. No, the volume's very, very low on that particular name. But from the broader markets, there are a fair bit of stocks actually that are moving. Hindustan Copper. Yeah, that's another one that's moving up. I think Hindustan Zinc as well should be moving quite well because silver prices have rocketed. And I think there's a bit of a melt-up that's taking place in metal prices. So that explains why you have Hindustan Zinc as well that's up close to around 2%. SAIL as well. Stock is up close to 2%. Jaiswal Nico, another stock that's moving on high volume. So a good start. Breadth of the market is the best part of the day actually. 1,800 stocks advancing, 420 stocks declining. Rima.
Well, it's Grow which catches your attention with the kind of volumes also it's seeing and price action 5.5%. And now the market capitalization has also crossed that 1 lakh crore mark. So along with Meesho, here is another new age tech company with a market capitalization which gets counted with amongst the biggest companies of India. KEC International, the Delhi High Court has lifted the ban which prohibited the company from participating in power grids tenders. So that's providing some cheer to the stock. Surabhi was talking about Shriram Finance. That continues to hold fort with a 2.5% gain. Ashok Leyland, Nomura says it's best place to play the CV cycle. Nomura has further increased the target price on Ashok Leyland to 196. So that's pushing the stock up. Tata Chemicals, they've done a small tuck-in acquisition of Novo Bay. Kajaria Ceramics opened in the red, but it was a minor downtake of about 1.5%, but has swiftly recovered, and that's got a green going for itself. So Street not too concerned about the news flow surrounding fraud. Manappuram Finance perhaps moving up in tandem with the rise that we're seeing in gold prices. So a little bit of green going for itself. And on the way down, Interglobe Aviation is on the flatter side. It gets added to the sensex, but you can't see too much here in the stock right now. Ola Electric, Meesho, though on the flip side, are seeing some amount of profit booking. All in all, the Nifty has added about 130 points this morning, very close to 26,100. So building on the momentum that we saw on Friday. On Friday, we added about 150, 160 points on the headline index. And we followed it up with another 120-point gain, with sectorally the big strength coming through in IT, metals and defense. All these three indices are up nearly 1%. And mid-caps moving in step, and it's good to see a strong advanced decline ratio to begin trade. 5 stocks in the green for every 1 stock in the red.
Okay, but Nigel called it out. GE Vernova, that has to be your biggest headline and the biggest flyer of the morning with this large HVDC order they've backed from the Adani Group. And that's really causing a fair amount of flutter on that stock. Look at that, 10% higher on GE Vernova. We'll get you more on this, more details on this order, execution timelines, etc. We'll get our research colleagues back in on this one. But in the meantime, let's do one thing. Let's go across and say hi to our market master on the show today. Neeraj Seth, founder and CIO, 3R Investment Management, is with us. Neeraj, great to be with you. Season's greetings. Hope you're getting all set for a great festive end to the year. Before we talk about the overall market, since GE is catching so much of the market's attention, I just want to start right there. It kind of puts the spotlight back on some of these capital goods / power plays, right? Because last year, it was really the year of, capex stocks, so to speak. This year, we kind of moved on. We moved to new age and things like that. But what's your sense? I mean, every now and then, these big order announcements come. Of course, the stocks get back into the limelight. But we had the analyst call. I think it was Siemens analyst call. And they were talking about how private sector capex in some segments is not showing up. So overall, what is your take on power and more capex-oriented industrial plays?
So I actually do think you will see some pickup in the capex cycle. And we've in fact seen a little bit of a dull period compared to obviously a lot of the public capex that has been driving the growth side. So I think this is basically at a point where the demand side and driven by obviously a variety of factors, you will see that pickup on on the capex cycle, which is actually positive for the industrial sector. And I think that it would probably be a good year in going into 2026 for the sector overall.
Okay, so you're on positive on capex. What else? You know, this has not been an easy year with respect to just backing one theme and making money. But I'll still ask you the question. And generally, to understand your portfolio construct, the bent of mind right now, what are the 2 or 3 themes that you remain structurally, positive on as we get into the new year?
So let's start from a broader global perspective. I do think the biggest part of obviously what's going to play out in 2026 is a combination of, I would say, 3 core factors. It's the fiscal policy, the monetary policy, and the AI theme. And I think they have been a big part of the driving force in the markets in the last 2 years. In some ways, there's slight change happening there. The fiscal policy continues in specifically the developed markets where we have seen a very expansionary policy. In fact, if anything, with the big, beautiful bill coming in place, I think the fiscal, in fact, sees more expansion in US as we go forward. And similarly, different drivers in Europe and other parts of developed markets. Japan, obviously, is another one jumping on the fiscal bandwagon. The second, on the monetary policy side, I would argue we are towards the tail end of the easing. Obviously, we saw the Fed cut last week. We had the ECB no action. We had BOJ hiking now. We are seeing that dispersion or divergence in the monetary policy side. But at the same time, I think we're towards the tail end of the Fed cutting cycle. Maybe 1, potentially 2 cuts I can see, but not more than that. BOJ is going to be gradual in their hiking cycle, stay behind the curve, obviously, which has put some pressure on the currency. But from a monetary easing perspective, the big change last week, which was a surprise, was the Fed actually doing the not QE, which is, they didn't call it QE. Not exactly that, but certainly some balance sheet expansion. And lastly, the AI theme, I think, takes a little bit more of a scrutiny as I look at it going into next year, where not every capex announcement gets you 2x the market cap expansion, which is what literally was happening in last few quarters. I think it gets more scrutiny. The theme continues. It goes more towards the beneficiaries than just the initial euphoria.
Neeraj, hi. So do you think India and the Indian service providers could count as beneficiaries of what's happening with AI? Because ultimately, all the service, the application, the layers which you need to build the entire architecture, the data modernization will have to be done by the Indian IT companies. So now that the hyperscalers, the chip companies have enjoyed a fantastic run, do you think attention now shifts to the Indian IT companies? What is your positioning and thought process?
So I would still be selective there for a simple reason that very broad-based IT companies, when you think about the services they provide, there's still an AI substitution risk that is still very much out there. But at the same time, the more niche players who are actually getting more involved in the implementation or the beneficiary part of AI for broader economy, I think there some of the values will start to accrue. So I don't think it's a sector-wide call that one can make on IT, but certainly the companies that are able to pivot fast in the adoption in terms of obviously the services that they provide to the end customers, I think there's certainly value will start to accrue there.
Hi, Neeraj. Good morning. Good to see you. And Nigel on this side. The last time we chatted, I recall you telling us NBFCs is a space you like. You like private banks as well. And this year, actually, that's been the bright spark, right? We've seen a lot of deals coming in there where a lot of foreign money comes in there and putting in large chunks of money. Case in point being MUFG investing a large chunk in Shriram Finance. Are you still positive on this theme? And if yes, how are you playing it? If you could name a couple of stocks with due disclosures.
Sure. So first of all, I still remain positive on that. Just from the broad long-term outlook, if you think about a secular theme around the financialization of the economy, the overall growth from a credit perspective, whether it's at retail or from a corporate standpoint, and the investment side, where obviously you see the growth in the investment management or the asset management companies, I think across the financial sector, both the buy side and the sell side, I remain positive. I think that's a long-term secular theme, and you would see the continuation of that playing out in the next few years. Now, the risk there always is depending on which part you're looking at. The credit cycle plays out. I don't think we're at the point where you see a significant shift on the negative side in the credit cycle in India. So I don't see a reason not to be positive. Now, on specific names, still stay with some of the more kind of established mid-cap players, but with high-quality corporate governance. Because the whole idea of M&A, the minority stakes, the foreign portfolio flows in the sector will continue.
How are you positioning your fund differently from the rest of the credit hedge funds, that are out there looking into 2026? Neeraj, can you hear me?
Sorry, I didn't get the question.
No, I wanted to ask in terms of your positioning, how is your positioning going to be a little different from the other hedge funds that are out there? Now, you've got exposure to Asia Pacific, India, Middle East, etc. So give us some of your big bets for 2026 and where you will have a contra play.
So the key is at this point where we are from a global credit perspective, I don't, as I said, I'm constructive from an economy standpoint, but I do think the valuations are really tight going into 2026, and that really puts you a little bit more on the defensive side in terms of the positioning. So looking at some broad themes around much more constructive in the higher quality, high yield in front end of the curve where you have long positions. I'll be short more on the longer dated sovereigns, quasis, where basically you see a lot of squeeze has happened over the course of last 2 or 3 years just by virtue of liquidity in the system. And at the same time, you want to be going structurally, you want to be long vol in 2026, because where you see the volatility in the system more from an equity or FX vol standpoint, it has been extremely suppressed by liquidity. So you do want to obviously have a combination of the hedges between the credit indices, equity options, long vol positions to actually hedge some of the tail risk for whether it's a big market correction or just the spike in vol that you would potentially see in the next few quarters.
Neeraj, finally, before we wind up, I started with the old economy. Let me wind up with new economies. At IT, of course, one can't take a sweeping call. That makes perfect sense. A lot of so India doesn't have obviously AI and deep tech, but we have all of these consumer technology plays, and a lot of these businesses got top dollar valuation in the hope of them building scale in the years ahead. What do you think of this trend? And how do you find the valuations in the space here? And would you be a buyer?
I'll be more selective here now. As I said, I still believe in the AI as a theme. I do believe we'll see, obviously, the continuation of spend from the larger hyperscalers because of a simple fact. It's a race you can't afford to be behind. And some of that obviously plays through the infrastructure or the equipment providers. But at the same time, when you think from the investor standpoint, I think, as I said, you'll see a little more scrutiny where investors will start looking at your balance sheet, potential capex, the return on that investment. Hence, not all of that capex, which is going in at a pace, will actually get rewarded from an equity markets perspective, which then gives you a little more measured view of where you want to position, and you'll start looking for the beneficiaries rather than just the primary drivers of the AI theme in the last few years.
Neeraj, always a pleasure talking to you. Thanks a lot for joining in and giving us your quick take on how markets pan out and how you see 2026 shaping up. Looking forward to chatting up with you rather soon. Well, the metals pack is in focus, so it's a good time to get in Nalco. Remember, the stock in this year itself is up more than 30%. It's been a big outperformer. Now, aluminium demand is structurally rising. We want to understand what's the view on that particular one. We're currently joined by Mr. Brijendra Pratap Singh, the chairman and managing director at Nalco. Hi, Mr. Singh. Good morning. And good to see you, Win. It's been a while since we spoke, sir, and good to have Nalco back on the channel.
Good morning.
Before we get to the chat, just want to tell our viewers what you're going to be focusing on, the global demand-supply scenario, the outlook on alumina as well as aluminium prices, and finally, on the company's expansion plans. Well, Mr. Singh, the street is a little bit split with regard to demand-supply outlook, given that China is already reaching the upper end. They have that 45 million tons of capacity cap on aluminium. Could you tell us how do you see the demand-supply gap panning out in 2026 as well as 2027? Do you believe aluminium will be in a bit of a deficit or surplus?
As far as the present projections are concerned, in the next financial year, that is 26, and maybe coming in the 27, there will be a deficit of supply. Some of the smelters, they are on the verge of some shutdowns like Mozal, Iceland, and Australia, Tobago. So there will be a deficit in the supply. Australia capping its production to around 45 million ton. And since the demands are increasing, the demands, if you see EV sector, construction sector, power sector, now data centers, huge data centers are coming. So the demand is increasing, and on the supply part, some restrictions from the smelters, then the deficit will be there in the coming 2 years or 3 years.
Okay, so you're expecting, demand to outpace supply, and because there are supply constraints, you're working with a deficit. Let's get to pricing then. On aluminium first. Earlier, you were assuming LME prices to average, I think, ballpark $2,670 per ton for 2026. I was looking at your presentation. But now we're close to $200 higher in comparison to that estimate. You want to revise the estimate?
Yes. Now, at present, if you see the LME, it's around 2850. And coming forward in the coming days, the next year, if we see 26, it is somewhere around $3,000 that we are seeing, considering the deficit in the market, which is going to be there in the next year. So somewhere around 3,000, around in between $2,900 to $3,000 will be the LME next year.
Okay, all right. So now you're working with the number closer to around $3,000. Interesting. We've seen a bit of a spike up, and you're saying that, maybe it has a little bit more legs from here on as well. That's on aluminium. But what about alumina prices? They have come down heavily. Do you think alumina prices now have bottomed out?
Yes, alumina prices, if you see, it has come down to around $310, $320. It has bottomed up just because of the excess of alumina in the market. Indonesia, if you see Indonesia, there is an increase in the capacity of around maybe 2 million ton to 3 million ton. Next year, again, they are going to add the refineries. India also, refineries are coming. And due to the closing of smelters, the demand of alumina has also gone down. So there is excess of alumina in the market. China also, some of the refineries are coming. That's why the pressure on the prices is there. And at present, the prices, which is somewhere around $320, it will remain in the next financial year also, because excess of alumina in the market. And there's some coming refineries. Some of the refineries are also going to be commissioned next year.
Okay, all right. So you're saying alumina prices will continue to remain subdued. So you're expecting to be in the vicinity of $320, $350 per ton. Would that be fair?
Yeah, somewhere around $320 to $330 per ton.
All right.
That's what we are expecting.
Okay, all right. So aluminium, you're far more bullish on. Just a quick word, since you mentioned Indonesia, I think 1 million ton of aluminium as well is coming on stream, right, out there?
Aluminium, it has not come. Next year it is coming, aluminium.
Yeah.
Alumina, the capacity is around 2 to 3 million ton. 2 million ton already has come.
Yes.
1 more million ton is getting added up. So excess of alumina as of now is there. And some of the smelters which has closed down, like I was telling, Mozambique, Mozal, Iceland, Tobago in Australia, it's going to close down for some maintenance and all that. That is going to create a deficit.
Okay, so you're taking that into account, that including that 1 million ton of Indonesia capacity that will come on stream, still aluminium will be in a deficit. Got that. Quick question, sir, with regard to the hedging strategy. It's become quite tricky because the kind of melt up we've seen in prices. How much of your quantity on aluminium have you hedged already, and at what rate? Because we saw a few quarters ago, we pull up a chart, aluminium has moved quite swiftly from around $2,400 per ton at the start of the year. It's moved all the way to around $2,900 per ton. So have you hedged any of your quantity? If yes, proportion of that, and at what level?
No. As far as NALCO is concerned, we have not hedged any of our quantity of aluminium, because we have a good market, good buyers here, and all the demands are there. So, and since the market is growing, the supplies are on deficit will be there, and the demands are on the higher side. So we are still not going in for any kind of hedging as far as aluminium is concerned.
So not hedged, so you will be enjoying the full price hike in terms of aluminium, right?
Yes.
And even on alumina, nothing is hedged?
Alumina, as of now, it is not hedged. But maybe in the coming days, since excess of alumina will be there, we may think of going on. But as of now, it's no.
And what proportion will you be looking to hedge of alumina if you have to do it?
Yes, we will make some kind of strategy because the kind of prices we are getting, maybe if we are getting $350 or like that, we may go in for some kind of hedging.
Got it. All right. On the cost side now, let's focus. You had the Utkal D and E blocks. I think they have ramped up fully. You're getting around 4 million tons on a per annum basis. If you could help us out on that, because that's a cost advantage to you. So give us some color out there. And on your employee cost as well, that had come down. And I believe you have a particular number of employees that will be retiring this year. If you could quantify both those two, benefit of lower power cost, because of the lower coal cost, as well as number of employees that could retire, that in turn could reduce the employee cost?
Yes, both on the front of our raw material, maybe fuel, coal, which is we are supplying. Earlier, we used to purchase around 7 million ton of coal from MCL, Coal India. Now we have our own mines. Last year, we did around 2 million ton. This year, we are going at the rate of 4 million ton. So around doubled capacity, and we will be reaching the maximum rated capacity of the mines this year. This gives us around, like MCL coal, it costs us around 18 to 1900 rupees per ton. And our coal costs around maybe 15 to 1600. There is a difference of around 200 to 300 rupees per ton, which if we see, it gives us around maybe 100 to 150 crores of revenues extra in the financial year. As far as employees cost is concerned, our employees cost is somewhere around 16% of the total cost. But this year, around 200 to 50 employees are retiring. And all these retiring employees are in the higher slab of pay structure. Their pay is in the highest slab. So our strategy is whatever the retirement in the next 4 or 5 years, we will be recruiting around 20 to 25% of that. And the major part of our maintenance activity, apart from core activities, we will be going for outsourcing. So we're trying to reduce the employee cost from around 16% to going to around 10 to 12% in the next coming 3 to 4 years. It is the target we are facing.
Interesting one out there. Employee costs coming down by around 400 basis points. That will help you in terms of margins. So tell us, what is the margin outlook we should be looking at? Last quarter, you were around mid-40s with higher LME prices, lower input cost. What is the broad range you see for the next few quarters?
Last quarter, our EBITDA margin somewhere around, we got around 44-45%. So this quarter also, we are targeting somewhere same margins will be there because our sales and due to high LME, our sales are good. Our revenue generation is good and our expenses are almost similar. Okay. But coming in the next quarter, the alumina prices has gone up slightly. CP coke, the caustic soda prices has gone up slightly. Our CP coke, these are the two major raw materials which we use in our refinery and smelter, that is caustic soda and CP coke. Slightly it has gone up. So that will push our expenditure maybe by around 100 to 150 crores. So that will slightly reduce our margins in the final quarter, that is Q4. That will be maybe somewhere in between 42 to 43% we are targeting EBITDA margin in Q4.
Got it. Getting to the expansion then. You have an alumina expansion of 1 million tons that is expected to come on stream in an already oversupplied market, actually. So is that on track, though? I think you had given a deadline of close to around mid-2026. And some of your predecessors, Mr. Singh, they couldn't go according to the timelines. Do you think this mid-2026 still holds out?
Yes, yes. Our refinery expansion is under a very close supervision. We all are seeing that next year, June 26, we are going to finish off the expansion. As of now, around 85% of physical completion is over. And we will start the commissioning in June and will take maybe 3 months to finish off the commissioning and all that. So next financial year, we are targeting somewhere around 4 to 5 lakh tons of alumina production from that refinery expanded capacity.
Okay.
Additional, apart from our 2.5 MTA capacity. So maybe next year we will be reaching, because this year also our capacity is around 2.1 million ton, but we are targeting around 2.3. We will be achieving 2.3 and next year we'll be adding around maybe 4 to 5 lakh extra. So we'll be reaching around 2.8, 2.9 million ton next year.
Got it. All right. And what about your capex plan? Because you have this big plan with regard to the alumina smelter, which I think most of the capex is already done. But then you have a capacity addition on the aluminium side as well, 500,000 ton over there. So for the next few years, what will be the capex spend? And I think, if I got the number correct, your cash in books is 7,500 crores?
Yeah, it's somewhere around like that. If our capex plan, you see, this year will be our capex plan is around 1,700 crores. Next year, it will be similar, somewhere around like that, because refineries, most of the capex will be done this year. Whatever aluminum capacities are getting added up, it is in the DPR stage, and the capex expenditure that will come maybe somewhere around next year. The capex will start in that. So next year, huge increase in the capex will be there, and that may go around 2,500 to 3,000 crores when our smelter and power plant, the actual groundwork will start. Because this year, next financial, it will be maybe DPR stage and ordering stage. After that, the capex will keep on coming.
Okay. Final question then, sir, before we let you go. What is the dividend payout? You've given a bit of a sweetener, interim dividend. More dividend on the cards, given the kind of capex that you have, and you'll be throwing up some cash flows as well. And just clarify, NALCO, is it a divestment candidate or not?
Dividend payout, you must be knowing H1, our dividend payout was good, around 4% dividend we have paid. And the similar kind of, we are thinking this year also, similar last year we will be paying. But in the coming years, since we are going for the expansion, huge capex requirement will be there. The dividend payout will be there because our revenues will be increasing. But we'll maybe doing the same kind of dividends as we are doing now.
And divestment candidate? Is NALCO a divestment candidate? Will the government of India look to sell any stake over here or look at privatizing it?
No. There's no thought process on that.
All right. Mr. Singh, thanks a lot for joining in. I've been actually around your unit, and I know the union as well is very, very strong out there, in terms of even selling the production. So divestment would be a very, very difficult one if in case it ever has to be taken up.
Yes, and in today's, as far as today's is concerned, we are on the highest. We are today, our opening was around 284. This is all-time high. NALCO is there.
All right. Good to see, sir. You're tracking the stock price as well. Investors will be quite happy, for a PSU that's also tracking the market capitalization. Thanks a lot for joining.
We are putting more thrust on increasing our own potential.
Yes.
Kind of production increase this year we are having.
Yes.
Potential which we are having, we are trying to increase on that in both in alumina and aluminum production. That is also giving us a good results.
We look forward, sir, to chatting up with you in 2026. Appreciate you joining in at the end of 2025 and giving us the outlook. Wishing you and the entire team at NALCO a very, very happy new year and a good end to the year.
A very happy new year to you also and your team also. Thank you very much.
Look forward. Well, let's focus on a couple of other stocks that are moving around. Vinny joins us to tell us about GE Vernova that's buzzing around, as well as Indian hotels. Vinny, take it away.
Hi, so for GE Vernova, a big order win that's come in for the company, right? And this is over the weekend. They got this order win from Adani Energy Solutions. When you look at it, this is an important order. This was mainly for contract and designing of an establishment of around 2,500 megawatt of HVDC VSCs terminal stations. Now, this is an important order that was expected in South Olpad. Key order, why? Because there were other bidders that were there as well, other companies that were hoping for this order. Normally, it was actually Hitachi Energy that was in the line to win this order. But obviously, this order has now gone to GE Vernova. So, a big positive that comes in over there. Analysts are anticipating that this total project cost is at around 16,000 crores to 18,000 crores, a big one there. And do not forget, GE Vernova has been getting a lot of large order wins in the recent time as well. When you look at the stock move also, that's also clearly indicating it for the whole year as well, 2025. YTD, the stock is up around 53%, 54% as well. Today itself, it's buzzing away in trade because of this big order win that's coming from Adani Energy Solutions. Now, obviously, apart from that we're keeping an eye out on is Indian Hotels as well as Taj GVK. Indian Hotels is going to be selling its entire stake of 25.52% in Taj GVK to GVK plus Bhupal Group family. Now, obviously, GVK Bhupal family will continue to be promoters. They will continue to hold around 75% stake in the company post this completion of acquisition as well. And this is in line with what IHCL has been talking about, right? Focusing on that capital light strategy. So by selling this, they're furthermore in that capital light strategy will accelerate the roadmap or the vision that they have for Accelerate 2030. This is in line with that. So we'll keep an eye out on both these stocks as well.
Thank you, Vinny, for that. This deal is more material for Taj GBK. For Indian hotels, it's very small, but Taj GBK is up 7-8%. And, we've been talking so much about promoter stake sales coming in at high valuations. But here is one company where the promoters are now showing the faith and confidence in the company and purchasing it. So the Bhopal family will be buying Indian Hotels' stake and increasing their stake to 75%. So there is that promoter confidence, and the press release also says that their expansion plans remains intact. So 1,500 keys is what they have right now, and they plan to expand it to 4,000 keys. And no change for customers because IHCL will continue to manage the properties.
Actually, let's get up Taj GBK. And Rima, we here at CNBC-TV18 have explained a piece on Taj GBK. Valuation-wise, on a per-room basis, as well as on a PE basis, is the cheapest. The biggest overhang was whether this block gets out of the way or not. And in the past, we've heard numerous times that it's expected various mutual funds as well were interested. But now the promoter entity coming in there and clearing out that overhang explains why the stock up 7.5%, and their expansion in Bangalore as well has gone live. So we'll have to keep an eye out on that front. But Vinny is still with us to tell us about KEC International. That's surging away as well. Vinny, tell us more.
Yes, KEC International, I beg your pardon, that's the important one as well, because now the Delhi High Court has stayed that order that had come in November, barring them from taking part in Power Grid's orders. Now, this order was actually this barment which they had was coming in for 9-month time period. This order has been stayed, means the company can continue to participate in the Power Grid orders, take part in that as well. Now, during that time, on 18th of November, when the company was barred from participating Power Grid Corporation's orders, that time the company had said that Power Grid accounts to around order intake is around 4% versus 27% last year as of that time, as well as in terms of the Q2 order book also, it accounted to around 15%. So still important. That time the stock had seen a sharp fall coming in, and now today, because the Delhi High Court has stayed the order, they can continue to participate in Power Grid's orders. It's a positive for them, and the stock is buzzing in trade, holding on to 6-7% of gain right now.
Thank you for that. Get into break. On the other side, we'll chat with Dipali Goenka of Wellspun Living on their outlook for 2026. Welcome back. You're watching Corporate Radar. Wellspun Living is the next management on the show. The stock is down 15% in 2025. It's had a rough year on account of export headwinds, the tariff situation. That said, the company does expect revenues of 1,000 crore over the next 2 years for the India business. So they are focusing a lot on the domestic business, which has been resilient so far. Today, Nuvama also initiated coverage with a buy, kept the target price at 1,028. Dipali Goenka, MD CEO of Wellspun Living, is now joining in, and with her we will discuss the impact of tariffs, diversification into other markets, and growth outlook for 2026. Dipali, thank you very much for joining in. Just to recap for our viewers, the first half of the year has been tough on account of the tariff situation, export headwinds. Revenues were down 14-15%. Margins, which were 14-15%, came down to 8-9%. How has Q3 been for you? Q3 versus Q2, has there been a pickup? And what is the situation with respect to absorbing the costs? Are you still absorbing it?
So let me first set the scenario. We are living in a Bani world. I mean, we've been talking about VUCA world. No, it is not. It is brittle, anxious, non-linear, incomprehensible. And we are, disruptions are no longer episodic. They are really constant. And let me just make that clear here. So Q3 looks what it is, because in the sense, when you talk about tariffs, it's not just the tariffs, it's also the inflation that comes to play, a lot of other factors that come to play. And here the resilience is not just reactive, it is deeply embedded. So yes, it has been a little soft in the terms of our top lines, along with our profitability as well. India exports have been down dramatically as well by 28%. from June till October. We've seen that as well. So yes, it's been an interesting one. But let me also clarify a few things to you. We are looking at diversification. We are definitely looking at other economies like UK, Europe, rest of the world, Australia, New Zealand, and Middle East. That's around 40%. Indian market is growing. We have a brand like Christie, which is growing at a CAGR of 30%. However, let me also clarify one more thing here. We are not going to lose our market share in America. We've been working with the world's largest home textile market, America, for the last over 2 decades, and this market share we will retain. As a company, we have a very strong balance sheet and free cash flow even in these toughest times. And this is where we will use our war chest as well.
So, Dipali, you said Q3 will be soft with respect to revenues and profitability. Q3 should be lower than in Q2 because Q2 there was some quarter-on-quarter sequential improvement. So just to put that softness in context.
Just let me tell you, I've been always telling everybody that this year has been a washout. Yeah. But this year comes in with a lot of learnings. We're very clear. Our focus towards 15,000 crores by 2028 remains. Our India as a strategy remains. And US market and diversification to different geographies remains. However, there are very interesting dynamics that come into play. The cost leadership, we will continue to work on that. AI is not a disruptor for us, but it is an opportunity where we are looking at around 20% upside in productivity when we implement AI. We're looking at 8 to 10% in the throughput. So yes, I can just tell you that we are building a legacy here. We are not shaken by blips. There was a COVID. There were the 3 C's. Cold, customer, and the whole supply chain that we're talking about. So this happens, and we have continued to grow at a CAGR of 9%, and we are focusing at a CAGR of 12% as we go forward as well.
Hi, Ms. Goenka. Good to have you on the show. Tell us about the competitive intensity, though. Bangladesh, Vietnam, Turkey, they obviously are gunning for the market share as well. How has that changed, with regard to India, Welspun Group as well?
So, Nigel, let me give you a perspective here. These economies are not stable. India is here to stay. Reliability, resilience, and sustainability. India is well positioned. It is a stable democracy, and it has very skilled manpower. And also a kind of a funnel of that as well. And government is doing a lot of things to help us in, easing out the ease of doing business as well. So there's lots that's happening here. So when I talk about Pakistan, Bangladesh, Turkey, Vietnam, I think they all have a ceiling even. And when we talk about home textiles, let me tell you, we live in an integrated India is the opportunity that India has a stable supply of cotton. It's not only the biggest producer, but the biggest exporter of cotton. It has an integrated supply chain. And I think that is here to stay.
So US aside, which is 60% of your business, you spoke about other markets which you're focusing on like UK, Europe, etc. And that's 40% of the overall revenue. Can you give an indication of what the growth will be in these markets, ex of America? Or has that also been a washout?
That's been an opportunity. And
agree. You put it in numbers.
No, the numbers, let me be very clear. I can't give you numbers today, but I can give you that, the opportunity is 40% growth in the rest of the world and UK and Europe. Europe is coming around. We know that, Japan is your re-emerging economy. Middle East is again growing. Australia, New Zealand. Australia is again a very interesting story that we have. So I think I can't give you numbers, but I can definitely tell you that when US is 60%, which was earlier 70%, we are 60%, 40% is this part of the world, and 10% is the Indian market as well. So imagine as the pie grows, this shares will also grow on that perspective.
Throw some more color on the domestic part of the business. I recall in the last many years, you have been talking about gradually scaling up that business. Yeah. So tell us, revenue targets, are they on track?
So you know what, Nigel? First, let me give you a perspective. The organized market is around 15,000 crore. It is growing at a CAGR of around 10% in India. We, as our domestic brands like Spaces and Welspun, are growing at a CAGR of around 20%. The very interesting point is also the religious tourism and the hospitality. That actually is also growing at a 20%. And on top of it, you're talking about the opportunity in the per capita consumption. And the per capita consumption is not only growing in the metros, but in the tier 2, tier 3. And the digitization we already have seen with the UPI, where 20 billion users. I think that holds a very strong consumption and opportunity in India. And with the GST, I think next year will definitely be an upside in this market as well. So we have been, continuing to grow, incubate this business. And now is the time where we feel that 1,000 crores is what we're looking at the next 2 to 3 years here.
2 to 3 years. You've said that before as well. The domestic business, India business will deliver 1,000 crore top line in the next 2 or 3 years. But considering that, at least as of now, we are in a weak demand environment for majority of your business, have we seen a floor to your margins? Or do you think there is further risk of downside pressure? Margins could contract further from here as you look to protect your market share, as you said.
Margins, as you know, 50% tariff, you can literally imagine what that looks like, right? What is in our control? To manage our balance sheets very strongly on our complete, profitability, not just profitability, but our cash flows very strongly, looking at opportunities, how we can look at costs. And I think those are the things that we're diligently working on. So, margins are a part of what there's an opportunity in terms of growth. But I think it is the resilience of a company that holds that company on.
Are you losing, money as you export to the US? Because you are absorbing some part of your cost. So just purely on the US side of business, on your volumes, what kind of money are you making now versus before?
I can just tell you that when you talk about 50%, you can calculate, but there's an opportunity of a lot of other things in the terms of first sale and the other things that we're working with our customers. The key flavor here is that we are not going to lose our market share in America. That's very, very clear. These tough times will not last. It's a market share that will remain and a consumer that will remain, which we have really consistently worked on. You're looking at, a strong workforce that is there, which is like 20,000 labor force that we have. We'll consistently continue to, hold them on. As you know, home textile directly looks at 46 million, people that it employs, and around 100 million livelihoods as well. And we'll continue to do that. This is just a matter of time.
Got that. And will you continue to prioritize reducing debt, or this is the time to rethink that strategy because growth is being challenged?
So growth is a matter of time. Debt is about investments for the future, right? And when we're talking about ourselves, the net debt today is around 1,500 crores, around that. And we will maintain a debt of around 1,000 crores in the coming years as well, because I think this is very healthy for a company which has a strong balance sheet and free cash flows. We will look at investments in growth of our brands, growth of technology, growth of opportunities that are there across the globe as well.
I think you'd spoken about being net debt zero by FY28.
We did.
Yes.
But we changed that. We changed that because we don't want to. We don't want to be, because if you talk about companies, I think they should be looking at, and we don't need to worry about our balance sheets at all.
Okay, so you've changed your guidance from being net debt free by FY28 to being comfortable with 1,000 crore of debt right now to focus on investments and growth.
Absolutely.
All right, Mrs. Goenka, always good speaking to you. As you said, there are tough times sometimes for industries, but you'll have seen it in the past. Just to recall, I remember the devastating 2001 Gujarat earthquake left Anjar shattered, but y'all rebuilt, and I was lucky, in fact, to visit that site as well.
Thank you.
Wishing you and the entire team at Welspun all the very best towards the end of this year, and we look forward to touch base with y'all and the other group companies as well in 2026.
Thank you. Wish you all a very happy new year. Happy holidays.
Wish you the same. Well, time to get back to the markets then, and we have Siddharth Rai who joins us to tell us how is he viewing things. The Nifty holding on to those gains. Hi, Sid. Morning. How are you feeling about the Nifty?
Hi, Nigel. Good morning, and thank you for having me on the show, first of all. See, Nigel, if we talk about Nifty, I think the last 45 minutes or so, this movement is very, very impressive. Nifty opened above 26,000, then went above 26,100 and is very, very nicely sustaining about 26,100 for the past 45-50 minutes. And also, when I look at the options data, Nigel, there has been a very, very aggressive addition in put writing positions in the index. So I do think that this time this move is here to stay. We'll probably see this move extending towards 26,250 and 26,300 also. So even fresh long positions in Nifty can be taken at this point in time because Nifty seems to be very, very strong. The structure looks nice and the data tells us that this move can definitely extend another probably 125, 150 points even further from here. So Nifty looks very good.
What about stocks, Siddharth?
Yeah, sure. We must see two stocks. Both of these we have to buy. The first one is Polycab. Actually, this whole space is doing very, very amazing. And probably in the last couple of sessions, there is a very, very strong turnaround in this whole space. Polycab seems needs to cover a little bit more space to catch up with its peers. So Polycab can be bought even here. Right now, the spot is trading around 7590, 7592. Can be bought here. The stop loss will be at 7560. And the targets being the first target 7650, the second target 7670. The second stock is UPL. See, again, there's a very, very nice breakout in this counter in today's session. The stock has made an open low. It started running at least exactly from the point where it opened. So UPL looks good. There is a fresh momentum building here. So UPL can also be bought. Right now, the spot is around 768. We can buy it here. The stop loss will be at 759. And the targets being the first target 785, the second target 795.
Okay, all right. Thanks a lot for that, Sid. Well, keep an eye out on the markets, and from the broader markets, a couple of stocks are doing a thing of their own. Just one stock, Lenskart. A lot of debate with regard to that IPO. Float is still limited out there. I recall the stock listed and it gapped down 10%. From the 360 odd mark, the stock is now closer to 500 rupees. Float is limited out there. A lot of debate on valuations. Many appreciating the business as well. Close to a 500 rupee stock then. Lenskart surprised everyone. For the time being, slip into a short break. Manisha Gupta is waiting for us. She'll tell us what's going on in the commodity markets.
Welcome back. Holding on to all gains. The Nifty comfortably above 26,130 now in a span of 2 trading days, Friday and Monday. The Nifty's added on more than about 1,000 points. Right on top of the gainers list continues to be Shriram Finance, now inching towards 934. So significant uptick compared to the deal price. IT, Wipro, Infosys, Bharti Airtel, which last week announced that in February, there's a record date for the company making the final call for the rights issue. So buying visible in Bharti Airtel, 1.5%. Hindalco also looking up in trade. In the mid-cap end of trade, Taj GVK Smart, GE Vernova, 6.5%, KEC International, and Welspun Corp up 2%. But let's turn our attention now to the commodity markets. Manisha is telling us how the rally in gold continues, up and away.
Oh, absolutely. You would think that we are almost nearing year-end and holidays, but no, the international markets, even the last few trading days, do want to trade higher when it comes to gold and silver. So this is what we've done in month-on-month and on a YTD basis. So you have gold first, which is trading at an all-time highs right now, has gained 6% on the monthly basis, but it is up 67% in this year till time. Outperformance clearly coming in from the PGM metals, where you have silver also trading at an all-time highs and has gained 137% in this year. 132% of gains coming in on platinum as well, which is trading at around nearly 17 to 18-year highs right now. And then you have palladium trading at a 3-year highs with 103% of gains. Take a look at how they've done on a month-on-month basis. So more than 30 to 35% of gains is what we've seen happen in the last 1 month itself for many of these PGMs. Well, as I said, gold and silver are trading at a record highs. We have palladium, which is trading at a 3-year highs, and platinum is trading the highest. The last time you saw platinum at these current levels was in 2008. So while gold and silver are trading at all-time highs, let me show you on what platinum and palladium have done in sense of prices and how far are they from its all-time highs. So 2080 is what platinum is trading, less than $200 away from its all-time highs. And markets do believe that with the kind of jump up that we've seen in sense of demand, supply deficit, you could be looking at platinum taking those levels out. Palladium, in the meanwhile, is quite far away from its all-time highs, but good gains continuing into this one as well. More than 100% of a jump up is what palladium has given you in this year itself.
There are various factors that we have been discussing all of this year, which continues to support precious metal prices, and markets believe that the fund allocations could continue for many of these precious metals as we step into 2026. It has been about ongoing debasement trade. The high global debt that we are dealing with right now does tell you that there could perhaps be more bond buying from US markets supportive of the precious metal prices. There are strong underlying fundamentals, especially when it comes to the metal side of it, where we are looking at deficit and the green energy demand continuing to support. It also has been about the falling interest rates, rising fiscal concerns that have led monies allocating into the precious metals there. And it also has to do with the broader economic uncertainty that we are looking at, renewed hostilities between Iran and Israel. And overnight, there have been reports of brewing US and Venezuela conflict. So geopolitics also continues to be on top priorities there. It also has to be about supply deficits that we've seen in silver and platinum. For silver, 2025 has been a fifth year of deficit. For platinum, it has been a third straight year. But when you look at the Indian markets, well, we are trading at a discount right now because of the volatility, all-time high prices. The investment demand that we saw in the month of October and November is not what you're looking at in December. There are some people who are also getting their old gold, silver back into the markets, leading to discount in the physical markets right now. Interestingly, when you look at the prices, well, that is the kind of move that we've seen in last 3 years. 2023, gold was at 63,000. Last year was 76,000. And we're trading at 1,34,000 right now. All-time highs there. Silver actually has doubled up much faster than what gold has done. So 2023, silver was at 74,000. We saw 87,000. And now we're looking at 2,08,000. So very, very strong gains continuing. When it comes to the next year then, well, markets are going in with a bullish call for 2026, 27, 28. Some people have come out with 5-year long calls as well, with bullishness continuing for gold prices. So while we are trading at around 4,300, Commerce Bank believes that 3,800 is going to be your average next year. 4,000 is what Deutsche Bank has come out with. CPM Group 4,500. JP Morgan has talked about 5,000 plus kind of levels in 2026. And there are various global banks and brokerages which agree with that 5,000 of a mark, including Metal Focus, Adiardini and Goldman Sachs as well. You also have silver forecast coming in on the bullish side, while markets are looking at a big range for this one. So we're already trading at 68, by the way, but we have targets of 65 from BofA and Goldman Sachs. You have JP Morgan still talking about sub 60, and UBS talks about a bigger range of 55 to 65 there. And then you have SMC, Citi, all of them talking anywhere levels of $70 to $80 an ounce. You have Motilal Oswal report coming in. Amrapali Group has come out with a report, all of them talking about $80 an ounce kind of levels for the next year itself.
Okay, all right, Manisha got that. Thank you very much for the roundup there. So that's the commodity market action for the time being. We'll take a quick break on that note. On the other side, we'll have a special discussion lined up on indirect taxation. How has calendar year 2025 shaped up? What to expect as we get into the last quarter of the fiscal? Prateek Jain of PwC and MS Money of Deloitte India join in.